There are a variety of ways that vehicle crashes impact the company's bottom lines that fleet managers need to take into account as they do what they can to minimize the damage.
Collisions and crashes impact the bottom line of a company in a couple different ways. First and most obvious, if they are insured by a third-party insurer, your rates can go up and you have a deductible that you have to pay for. That's the most common scenario for small and mid-sized fleets, where you're insured by a traditional insurance company and you usually have a small deductible portion that you pay yourself. But as fleets get larger, it's important to realize that the amount of the collision damage cost that the fleet carries goes up. Most mid-sized fleets, now I'm talking about 2,000 vehicles, that ballpark, they have a much larger self-retention. They'll often have the first $100,000, sometimes even the first $1 million of damage is up to them to pay. And the insurer really only comes in for what's called catastrophe events, some massive damage to infrastructure where it's multi-millions of dollars. That would then be covered by insurance. And as you get to large fleets, usually above 3,000, 4,000 vehicles, most of those fleets are fully self-insured. So every collision you avoid is straight to the bottom line profit because all of the damage comes out of the fleet's balance sheet, the fleet reserves directly. Now, the other thing that's important is when people think about the collisions, they often think mainly about the property damage, right? The damage to the own vehicle, damage to the other person's vehicle. But much larger portion of the bill is injuries to people. And that can take both forms as well. Injuries to third parties, so that would be your liability coverage for medical treatment for anybody else you injure. But if the driver is an employee of the fleet, which is the case in most cases, if they're not a contractor or temporary, then any injury they sustain is also a workers' comp claim and also borne by the fleet. And so we look at all of those buckets when we think about how do you minimize the damage. And usually for most fleets, by the time you add up all those elements that I just described, it'll wind up being between about $3,000 and $10,000 of loss per vehicle per year. So it's a very significant amount of money. For most fleets, it is typically the second or third biggest cost. Usually driver salaries are the biggest cost. Sometimes vehicles, sometimes fuel is bigger than insurance and loss, but often insurance and loss can be the second biggest cost. So it's a very material expense, and reducing it can have very material bottom line impact.